Microphone check and screen share check, please. All right. Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for February 22nd, 2022. So I had a very interesting 90-minute discussion today with Peter Shaw, who's the CEO of Immortal Studios, with my friend Professor Angus Fletcher. I put those two great big brains in one Zoom meeting, and we spent about 90 minutes watching the fireworks fly between two of the most creative guys in the planet. They are now big fans of each other's work, and boy, it was a lot of fun to watch genuine artists go at it in collaboration and looking at potentials. Just with fantastic time. I'll tell you more about it later. So let's see what we had today. So Friday, the market closed at a new 10-day low after making a new 10-day low at like 434, right? And then it gapped down, and then had a micro move up, but then really settled into selling off the whole day to make a new 10-day low at 426, down around Z-2, which also took out the previous belly of the RL10, which, you know, officially makes that a collapsing dragon. It rallied slightly to close at just a shade under 430. So this was not a helpful move at all today. You know, the news over the weekend. Lucky that it's not worse than this. I just filled up my car with gas at $3.50 a gallon, and just thankful I'm not in California at $6 a gallon. So let's look and see what we got. So today, new 10-day low, like we said, new 10-day low. The slope of the 3-period hull is sharply down. Today, the RL10 extension turns to winter. So because of this move, that whole price bar turns red. So we are now into the winter of MACD. We've sold off from the all-time high over, 10.5%. So we are now officially into correction level. We spent the entire day out of the river. So this was the high of the day, and that's the southern edge of the river. And we spent the entire day out of the river between there and Z-2. The dragon is getting wider and sloping downward. The slope of the Bollinger Band mean is clearly down. That's not even a question. The all-time high is still way up here at 480, and we're down here at 429. So that's basically 11% off the top. And as far as next price levels to the downside, if that 10-day low and the Z2 gets violated, the only next thing there is the absolute 30-day low, which was this incredible extension to the downside, which took it down to 420. Could we see that in one day? Yes, we could. It's only 1.5%. And then if that breaks, Katie bar the door, because now the Z3 is way down here at about 415. So this makes the argument for why you should care about the COTA 2, especially in this case, the COTA 2 to the downside. So we're just going to see what that looks like here. So we have a peak up here at 1. The lower peak down here at 2. a lower high at 3, which rejects the Bollinger Band mean. And then at 4, right here today, is where that collapsing dragon occurs, right? So if we were going to, we could get short as soon as this yellow dot in here, which is that is the COTA 2 RLXD entry to the downside. You could arguably get short here on a rejection of the top of the dragon, and then essentially a collapsing dragon on the RL10. Could get short here on a new 10-day low Friday. Today on a breakdown to a new daily low. Could have gotten short here on a collapsing dragon. So there's plenty of places for this to get short. What I would say is that everything inside of this little space between the southern skin of the dragon and the RL10, where that breaks the previous RL10, this is all in the pocket right here. We call that being in the pocket. So if you're in the hybrid course or the advanced swinger day trading course, we'll often call that one a pocket, where you're nestled in the elbow of this dragon right here, where it makes the curve, and it has to make that lower high. It gives you this little, it's like a continuation pattern, and you're betting on this whole thing selling off as a resumption of the original big trend, which is this big downward trend here from 1 to 2 is bigger than the trend from, the positive trend from 2 to 3, right? So when this breaks down below, anywhere in this yellow box, what you're doing is you're betting on a resumption of the big primary trend. You don't know that that's going to be a big payoff until it gets below 2, which is that collapsing dragon. Like starting like right now, this thing could be, this could be immense because it's just starting to pick up the size of this fail, right in here. So one way to evaluate the opportunity there is you could take the same size of the move from 1 to 2, and you can say, well, if I take the peak from 3, then that thing could come down as low as this price here. All right. So that's going to be like about 414. If I'm really aggressive, I might say, let me just take the same size of the move and start that from where the collapsing dragon begins. I prefer the first method because that feels like it takes into account some of the good feelings from the green. But even so, if we just get the same size move from 1 to 2 and call that like from 3 to 5, and follow the price level down, we could still see this price get to like, 414. And the idea being that we expect leg 2 to be the same size as leg 1. So this would be like from 1 to 2. Let's go make this very visible. So if we just duplicate that, if it was from 3, we'd say it could look like that. And that's why we think it could get to 412. If we think it starts where the yellow zone fails, then this thing gets horrible in a hurry. That goes down to 400. So either one of those is painful as can be. And the main idea is that the red is bigger than the green. All right. So what I wanted to show in here was that all of these yellow dots are places where in the COTA 2 to the downside, you can arguably make your entry, that you don't get the collapsing dragon until it gets to 4 and then breaks below the previous belly here at 2. So just some technical work. So I think 412 is certainly within reason. Now, by the same token, we're not allowed to be surprised if we get this same recovery move, because the last time it was here, it made that recovery move. And so this would look like that. The reason that's less probable now is because this rebound here was not even strong enough to overcome the previous sell-off. So that, and then the size of this move down here was already as big as the recovery. So you got to weight the possibility of the downside move potentially larger than the recovery. But by all tokens, we could think of this as a critical state right here. And that's the way I'm going to treat it, that from this space, there's a higher than normal probability of a strong move in either direction in a short period of time. So we'll be ready for a nice bounce off that level like we saw before, or a continuation of that of the leg from 3 to 4. We would call that from 4 to 5, I would say. Okay. So let me know in chat if you found that helpful. Okay, next up, let's take a look at our sectors. So the S&P was off 1%, 1.07 today. What was better? The tech was only down 1%, so marginally better, still a loss, but marginally better. Treasuries were the only index of ours in the green today of the big 6. Treasuries were up 0.26. To the downside, we had the Russell was off 1.4, emerging markets off 1.42, and diamonds off 1.46. So no joy anywhere except treasuries, and even that was kind of muted. Let's take a look at the sectors that were worse. You had lumber and wheat and precious metals were off 1.3, materials 1.4, energy and lithium 1.6. Then this great big cluster between 2 and 3. The other lumber, oil exploration, Simon Property Group, which is commercial real estate, S&P innovation. The FANGs were off 2.4, ARC Genomics 2.5, blockchain and S&P consumer discretionary off 2.6 and 2.9. The global future of finance was looking grim at minus 3.9. Marijuana and moonshots off 3.9 and 4.1. Clean energy and Bitcoin trust 5%. Everything else just getting slaughtered, the individual companies. Ethereum and Coinbase off 7 and 6.5. Rivian, Bitcoin futures, Alcoa 5.25. Robinhood and Tesla off 4%. So Tesla down at 820. The bloom is off the lily. Squarespace 3.9, Apple 1.7. So just no joy anywhere in Mudville. US Steel off 1%. You know, it was slightly better than the S&P, but still getting smashed. All right, let's look at the upside sectors. There are only a few. So S&P Tech was marginally better at 0.92. S&P Biotech, Staples, and Finance up to 0.5. VIX was off 0.38, which is kind of surprising given the geopolitics right now, that the VIX is saying essentially they think they're going to get all that resolved. Mexico, solid 0.5. Then oil, blended commodities, Brazil continues to crush at 1.6. Agriculture, the inflation play 1.66. Individual companies that did well, Bakkt Holdings, 2.9, Cliff 0.5, Microsoft 0.07, PayPal 0.46, but not many safe havens here. Only really Brazil and direct energy plays themselves. Maybe food is the best one of all. I want to catch up for a moment before I get in. I'm going to go through my trades for today. So I want to catch up on this one that we spent some time working with Mustafa over the weekend on CMBM, Cambium Networks Corporation. And when we map that one out, let me see if I can call that up real quick here. CMBM. Yeah, what we did was we went through a multi-time frame, multi-lens analysis where we went from the monthly all the way down to the 2-hour charts, and we're looking at key price levels. And as we were doing that, we had marked off this region right in here, this between 27.75 and 28.25, a 50-cent risk box. And then we looked at the wider risk box, this one, where we said this is where we would want to put second positions on, because if it fell out of both of those boxes, we were thinking, hey, good chance that this thing is going to fail all the way back down into this cluster of sideways. And so if it was going to fall that low, we wanted to get 1, 2, 3, and even 4 entries short in order to get the payoff on like a false breakout. And we said that could be very much like Bakkt Holding, which had the great big one-day run up and then couldn't hold its price level and it came back to earth. On the other hand, we said if this thing did break out and attract a lot more attention, then we wanted to get a quick continuation in at 28.25 and then 29, because it would have cleared the Z3 line, and then we would be ready for it to move back to these other previous price levels that we had mapped out. So we went back to previous resistance levels and support that had broken. And so we mapped out all these price levels to the upside and to the downside that reflected what we thought were key price levels, in both directions for support and resistance. So then when I was able to trade that one today on the basis of the intraday trade. I've never traded that one before, but I wanted to just have some fun with it. And so the trade frame, these two larger yellow boxes were the from the day trade. The actual trade I took was this one. So this one is it opened here and then sold off through the edge of both boxes, essentially. I took the second one as it crossed the VWAP and then using a nice tight stop of about 40 cents. This thing continued to fail. It gave me like a collapsing dragon after it rejected the VWAP for a second position short. It came down and then gave me like an SSC entry. And since I never traded that one before, I considered the replay to the VWAP, but I've got no experience trading this one. I was frankly just happy to get paid on that one as like a demonstration. Now, it turns out that later in the day, this thing sold off even more sharply, but I was content with getting the early move as I start developing my understanding of that symbol. So that was that one. So that's using the multi-time frame, multi-lens analysis to set up key price levels for getting short for the intraday trade. Because we're in bearish normal conditions, I got no interest in holding this thing overnight in either direction. So that was my first trade ever in CMBM. All right, so next one up, I want to take a look at, so this is Cliff Natural Resources. And so in the chat box there, if you tell me the pattern that you are seeing right here. My brother asked me, does this have to do with the capitalization of the stock? Does what have to do? The capitalization about holding it overnight, or? Well, yeah, I mean, I don't even know how big it is. It feels like it's a small to mid cap at most, because I've never heard of them before. So this is something that an IT professional would probably know. Yeah, so this is a COTA 2. What we have is the previous day's low at the end of the day here, and then it gave us a quick run up and then a sell off, a nice big run up and a sell off, but it made the all important higher lows. And so on this one, what I'm looking at doing is I'm looking to stalk, these bars here. So right now I'm probably on one of those three. That's where the PSAR dot should be next time. It hasn't quite broken through that yet. And then if I'm going to take that trade, I'm stalking my exit to be right here. Now, it may be that I can get my exit closer to the VWAP in here. I want to see how this thing performs. Like if on the next bar it goes through those entries, maybe I'm willing to take a closer risk than all the way back to here. But I like putting this one in the market right now. So if this thing does reverse, I can go ahead and just get short on that position. So, and then what I'm looking for to the upside is I would think, this thing should be able to get to the Z3. It should be able to get above the peak of the RL10 and leave the river. So those are all three reasonable price levels where I'm expecting, some serious resistance would probably be like right here at the top of the, at the top of the RL10. So if I do get in at one of those three green lines, then what I got to do is I'm going to be watching that blue line to see if it can get through there. I would expect it to run fast to the Z3 lines. All right, so now what I'm doing is I'm noticing that the PSAR is still coming down. It's sold off, has recovered somewhat. I'm not interested in being short because materials and steel were the only sector at that point in the morning where anything was working. I'm committed to the long side on Cliff. That's a harder symbol to borrow on than something like US Steel. So now what I'm doing is I'm committed to this long side trade. I'm looking for an entry probably right about there. And I would now pick the RL10 belly as my stop. In the next bar, I do get the entry. So this comes down and takes out the PSAR dot right here. So my trade frame looks like this. My stop is looking like this. And I'm really waiting to see it get above the blue line to be persuasive. I can take these other entries off. And now what I'm really trying to do is figure out how soon can I get to no lose plus dinner for two. So no lose plus dinner for two would probably be up in here somewhere. So what I'm going to wait to see if I can get a price move through the blue line, then I'm going to jump. I would jump my stop up into here. So I'm mapping out what those decisions are as it's starting to move in my direction. This is where it gets through my blue line. I like that. I'm probably all ready to go, maybe even here, and jump my stop a little bit higher. I wouldn't be offended if you do that. So now I'm going to, this would allow me to keep half of the move from the green line to the blue line. And the blue line is frankly where I expect this thing to fail, because that's where it failed last time. And you can see how quickly this thing fails. When it does fail in a matter of 2 minutes, it could come all the way back down to where my initial stop was. So I don't mind locking in half of that gain right now. Moving in my favor, I probably want to go maybe like a 2-bar low or something like that. I might be tempted up in here for, if it can get above the, if it can get above this price level here, I'm probably interested. That's the soonest I'm probably interested in a second position, because then I'll have more than 2R in hand. I didn't take it, but I should have. Darn it. Note to self, should have been stronger on that. Now what I want to do is I want to lock in that much, because now I notice that I'm getting near the Z3. I get 2 more boards. Now I'm really feeling stupid for not having put in that second position in, but I'm noticing that the size of the dailies, or this, not the size of the size of the bar ranges are starting to diminish, still making higher highs and higher lows. So it feels good, like it's climbing the ladder here, like it did down here, but I'm already pushing beyond Z3. So I probably feel like I need to do this to lock in. And I'm noticing the rest of the market is selling off. I should have exited here. On my best day, I want to be exiting there, but got lucky. Now this is the one where I'm really getting concerned right about it here, because I haven't made a new high in almost 5 minutes. I'm noticing that the RL10 is rolling over. It's crossed the baby dragon. If I'm not already at this price level, right about here is about a 1, 2, 3. If I look at this as bar 1 and bar 2, then a breakdown below here would be about a 1, 2, 3 exit. Sloppy. For some reason, I don't remember why, I was in the had to have been in the managerial exit. Remember, that's going to look like this guy right here. So just take the Bollinger Band mean. What's all the sweating about? And then compared to these other previous entries, the first sniper exit where a PSAR hit is probably this one right here. So any one of what I would say that now is any one of these exits inside here gives me about the same stuff. Taking the managerial exit actually gave it, 15 or 20 minutes worth of time where if it wanted to make a new high, it could. But all things considered, I give myself about a C on the management. If that's the only position that I'm in, then maybe I'm better at it, but I know I have some other positions. What you saw me, if I'm trading this live, what I am saying there, I'm either going bar by bar like I just did, or I'm committed, because if I have multiple positions, I'm committed to just the managerial exit until such time as I get 2R in hand, and then pick up the mechanical sniper, and then I should get out like here. That's in a perfect world. If I'm doing my best, I should really get out here. And the reason I should get out there is I'm looking at this, at these two little horns of the dragon right here. It made a run up and then immediately sold off, came down to the PSAR. That's where ideally I should be getting out. The managerial exit protects me. This other one where I've locked in ends up doing a pretty good job anyway. So I'm really not risking that much. And then so the difference is only a fraction. So anyway, that's what the cliff trade looked like. Here's one. Now, let's name this pattern. So the big blue line is the open. So it closed here, gapped down to here, and then gives this little run up, holds support, and then I take an entry right here. What would you call that? Yeah, I would call that an SSC. It's not COTA 2 because I can't see the previous low. And because of the gap, I'm not as interested in the previous low from the last cycle. So this is really, I look at this gap and then sell off really as your harsh winter. All right. So I take a look at that. Let's see if I can draw that in. Yeah, I take a look at that as the harsh winter, and then it finds a support level, crosses the baby dragon, crosses the dragon. And now if we zoom in on this a little bit, this now takes out the PSAR dot as it crosses the river. And now I'm just using the standard exit of the belly of the RL10. I'm noticing, yeah. Oh, right at the open. Yeah. Well, I mean, this is 8 minutes in or 9 minutes in, but yeah, that's morning hook, and it failed to fail further. And it looks like it's trying to close the gap to yesterday's close. So I'm looking for a move to here. I'm looking for a move to the RL 270. I'm also noticing this is where yesterday's VWAP finished. So that's what they thought was fair value yesterday. So if that's the case, I'm thinking that this is an upside target that's in range. So is this one. I would call all of that really the same target. And this just looks like, this big red sell-off just looks like a bunch of guys trying to chase people out of the position. Now, by the same token, where I've got my stop in at the belly of the RL10, that's going to be a hard collapsing dragon, right? So if this falls through that red line, I'm going to be on that like a fat kid on cake. So I'm only risking the yellow box. I've got a move to yesterday's VWAP would be the least surprising move. I mean, that would be as unsurprising as a failure through the red line. So in fact, a move back to yesterday's VWAP from here. This would also be unsurprising. So what I'm doing is I'm taking essentially an SSC to get to the VWAP. I'm risking the yellow box. And if it fails, I'm going to be short on a collapsing dragon. So, I'm not offended by that trade frame. Okay. So that's what this is looking like right now. All right. So based on the way this is drawn on your paper, what is your gut telling you do you have a bias about which trade you want? Do you think it's a long side trade or a short side trade? Where I think I've entered is perfectly balanced in probabilities, and I'm not surprised by either the red arrow or the big green arrow, and that I'm basically just risking. I'm risking this yellow box. So let's take a look at this. By this price level here, I should be, getting my stop to about here, and jump this right to here and just be done with it, right? So that allows me to lock in this much gain no matter what, right? So by moving that stop to here, I've made the green box no matter what. That feels correct. Let's see how I did. By this price move, I should have my stop to about here, like a 2-bar low, and the Z1. I'm not even thinking about a second position until this breaks above the Z3 line. So now what I've got is I've got the next little piece locked in. This is the first price level where, oh, okay, it's stopped running up. So I'm going to get right now my stop to a 2-bar low. I'm a little concerned right here that the uninterrupted run to the top side, it did not make a new high. So I want to, I want to lock in that extra piece. That's what I would be satisfied with. I'm not sure what I did on this one. Lucky, lucky, lucky. So end up taking this one here. And that turns out to be like a 1, 2, 3 exit. And I'm pretty happy with that. Now there's a whole lot of nothing happening. Now it's feeling like a Z3 pinch, and we're actually coming into a super pinch here, because I've got the RL 10, 30, 90, and 270 all within a really nice tight wrist box. I should be ready to do something like that if I'm trading this in both directions that day, whatever this symbol is. And now I'm ready. I should be ready if I want to trade this as a super pinch breakout, something like that. I should have asked you what that trade pattern is. Okay. Now, does anybody not see the super pinch? So I can get short here on a breakdown of the Z3, and I can get long here on a breakout above the Z3. And if I'm getting this short here at the Z3, I'm still getting short just above the VWAP. So if it does break the VWAP, coming down to test the low would be the least surprising move. So I'm front running that move a little bit, but that's because I want to pick up this extra little piece right here. And I feel like based on where all of these lows were made before, if those lows get violated, then this is soon enough to get short right here. All right, so that's how I'm reading that. End up not taking anything. That would be this would be a reasonable. This would be a reasonable entry. And if you take that entry, this would be a reasonable, whoops, this would be a reasonable exit with a stop and reverse here with a -1. That feels like a almost fake one go to the short side. Okay. So that was a little over, that's probably two execution R in Microsoft. This turns out to be Microsoft's move from here to there. And again, the whole rest of this market is selling off hard by this time. Microsoft was one of the last to start rolling over. And there were many other things that were better than Microsoft for getting short on, but I was not really interested in the long side with the whole market selling off. All right, so that's Microsoft. All right, so here's one. Let's name this. Let's name this pattern. Yeah, this is a collapsing dragon, and it's crossing the VWAP. And this is just one that, you know, you just love. You love to see it failing through the VWAP and breaking out of the Z3. I'm using the Bollinger Band mean and this PSAR dot here as a stop. By this time, I'll still draw the stop as a red line, even though I should probably draw that as green. So if I'm using this PSAR or this PSAR dot, I'm not offended by either one. By this time, wherever you started at, your stop should probably be like right there, and ready to keep marching that down. Like if this bar here fails further, I'm ready to start capturing all that. But I'd like a stop like right about there. Something like that, locking in pieces. I would have been happy with this one. That's about a 1, 2, 3 exit. If you get out at that yellow dot, then this collapsing dragon-ish, technical collapsing dragon was here. That's like a pocket second position because the RL10 has rolled over. I want you to notice that. I want you to notice as soon as this could not even get to the PSAR dots, but then starts failing. So if you got out here, I'd like to be short here. If I didn't get out here, that's a good second position. Okay, so this one is in US Steel. I ended up taking, because I had two positions in and this started moving against me. So I get a fractional loss on the second position. What would you name this entry? I would accept either an SSC or a COTA 2. This one kind of feels like a COTA 2 to me because it had an opportunity to fail in here. It gave me like a low, and this feels like a higher low. But I would accept an SSC on this one, SSC or COTA 2, with a typical stop here at the belly of the this comes all the way back over to check the belly of the 10. So that's why my stop is there. I go ahead and take the loss. Try it again. So I'm going to see how that maps out. Same one. Yeah, that's about the same stop level. What would you call this one? I would call this a missed opportunity to have stopped and reversed right here. If I'm being honest, as I missed this one for sure. Especially the Z3 pinch, man, I was horrible on this one. What would you call this one? This one feels like a SSC to me because I'm really looking at I'm looking at this as a harsh winter sell-off and then a strong move up through the PSAR dot. So that has the flavor of an SSC to me. And what I'm looking for is the move through Z3 back to the VWAP and then to the RL270. So I'm considering those. And then I'm looking at this price as a collapsing dragon. So take the 1 hour loss. I should have stopped and reversed. God, it's horrible. Oh, God, is that horrible. So I must have just been committed to the long side on this one, and I don't know why. That's too nice. That's twice I have missed my favorite pattern on an intraday trade when we are in bearish normal conditions in a weak sector and a weak stock. And so I'm just pissing away capital here. However, having said that, what would you call this entry? I would call this one an SSC because again, we still have what's now an even harsher winter. The RL10 bottoms out. It comes through my little PSAR dot here crossing the dragon. So I take the standard risk. Finally got paid a little bit. That's about 1 R. Missed this one on the collapse through the dragon, through the Bollinger Band main, through the PSAR, through the bottom of the box, just completely missed it. Committed to the long side like I am on US Steel today. What would you call this one? Here's a bottom. Here's another harsh winter. I would call that one. I might call that one an SSC because technically it made a lower low. But I could, if you called it Kata 2, I wouldn't be offended. So that's where that one ends up. So we're going to carry that forward into the next chart. All right. So here's where that one sets up. So there's the bottom of that that harsh sell-off. It gives me that gentle rise. It gives me the Kata 2 or an SSC entry. I'm looking for it to get above Z1, above Z2, above Z3. I noticed that the RL270 is sloping downward. So as an upside target, I can either play, I'm thinking about this line is the pure horizontal fair value. If I just take the slope of that and let it decay at the normal rate that it has been, then that's the price where I get back to fair value. So that might be a move that looks like this. And then here's my stop. Now, what's your feel on this one? Where would you just on your own sheet, do you have a long side bias or a short side bias? This is a continuation of that previous one, that previous set of trades. Do you have a bias? Do you have a feeling about this one? I'll ask my brother this one. Are you long on this one or short? So my brother says, hey, the slow grind up gives him a short side bias. And Ron's looking for a long to the VWAP. So there's my stop, and there's my stop and reverse. So if I play that probably like that to the Bollinger Band mean ish, that would be my reasonable a reasonable stop in there. Somewhere in here, I'm feeling stupid that I haven't gotten a second position in. Right about in here is that's leaving the floodplain or leaving the Z3. I feel stupid that I don't have a second position in. Now I want you to notice that the additional sell-off has now made this the RL270 feel like it should be rotated down a little bit. That's a projection, the new projection of the RL270. And now here's the VWAP is starting to decay. So that would look something like, that's probably where the VWAP is going to end up on an upside trade. But by this time, if I've only got the one position in, then I should have, here's my initial stop. Somewhere down around in here, my stop should be like right about here. To lock in that nice gain. Again, I should have had a second position in here somewhere. Second position. This is what pattern would you suggest justifies the second position? What would you call that pattern? Like if I didn't have the first position in, what would you call that pattern? Yeah, either K2 or I would say I was looking at it as a collapsing dragon as it was failing below those two horns. There's a tiny wavering in the force right there. So that one, that's 2R plus momentum in hand. So I think of that as a collapsing dragon. Now on this one, notice that the sell-off has begun to diminish. As we're reading this thing bar by bar. Now, as I look at that big range extension, now it's starting to, the selling is starting to dry up in the same way that after this big bar, it couldn't make new lows and then it started to reverse. So now that I got two positions in, I'm really stalking that. If I'm on a good day, I should have a stop like right about there to lock in the gains. Now my second position is going to finish in the money. And that feels pretty good. Now I definitely wished I had exited here because after I see that big extension and then a sharp reversal that takes out that high, I'd be pretty happy with an exit right there. And I end up getting, oh, okay. The next bar gives me a 1, 2, 3 exit right there. So that feels pretty good. So this is just an example of the, when I originally framed this up, had all kinds of signs pointing to the upside. I tried to lure you into a belief in the upside by the way I drew the great big box. I needed to induce a bias because you didn't have skin in the game on that one. Like I had had 4 trades previously to the long side, the last one of which worked. And so I was trying to induce a visual bias just in the way the screen was set up. Sneaky that way. So now I try the stop and reverse. It doesn't work. I try the stop and reverse again. It doesn't work. And then I feel like I'm done for the day. So I finally got on the short side on a good trade on this one. But you notice that I had a significant long side bias in materials that I just had difficulty overcoming. I left more on the table with the short trades that I didn't take because I was trying to take long side trades, which didn't really follow through much. So this was about a C day in US steel, but it was positive expectancy. So just some bar by bars from today. Okay. Let's go to the daily report, get set up for tomorrow. So now we want to get in the zero state and be open to what the charts are saying. So I don't want to have a bias for tomorrow until I've let the daily report charts speak to me here. So we're going to go right to dashboard number 1. And I'm going to remember, oh yeah, bearish normal. So no swing trades to the long side for me. Now the 90, 30, and 10 days are oversold sharply. The 2-day isn't much better. And the 270 is back to just a fraction above the midpoint at 55. We're 1.5% below the boundary for sideways, or 3.5% below the 200-day moving average. The risk Z is rolling over. We're locked in on oversold conditions. Because we're under the 200-day moving average, we're not going to get any long side trades in overreaction or channeling, because again, we are below the 200-day moving average. So that one precludes any long side trades. That's an example of using market condition analysis to build a rule into a system that only lets it trade in market conditions that are favorable to it, right? So that's the purpose of having that as the first rule. In the Dow, only 2 dojis today because everything was pretty directional. Note the proliferation of 5DDs. Apple is interesting because it was a channeling and an overreaction in a 5DD. That means it didn't sell off as much as the rest of the text did. There's a ton of quality auto framers, so they are the fish should be jumping tomorrow. McDonald's was a big winner today. It was actually 0.98 for the day. Home Depot got smashed. It's a 5DD and was down 8%. You just I have to be interested in Home Depot now. Probably an earnings announcement. Somebody would probably know. Yep. So that's sort of the culmination of this whole sell-off period. You know, all of the joy from this large move to the upside has now been negated by all the pain and suffering to the downside, and then some. So now as I look at this at the bottom of the day, I can basically come over to the belly of the dragon way back over here and say probably 305 is the price level of interest. And now what I'm going to do is I'm going to put a little a little box around this. I'm ready to go long if it breaks north of about 319. Sight unseen. Just hold my nose and ready to buy it. Because why not? At the same token, if it breaks below at 314.5, I'm short. If it makes a new daily low, I'm short a second position. So I'm going to put another box around this and say, look, that's probably what my two upside positions would be. If it breaks back above yesterday's Z3, I wouldn't be offended if you took it all the way up to the Z2, but I think I'm going to go like right here, because to me, if that overreaction, if anybody ever wanted to own Home Depot, wouldn't you buy it on sale? It's down from, I mean, everybody wanted to own this thing at 420, and now it's on sale for 313. So that's 120 on 420. That's about a 28% sell off. If I wanted to be precise on it, I could go up to the highest price, drop that vertical down and say, show the change percentage. Yeah, so that is off, 25% in Home Depot. What am I going to be afraid of? So those are the two prices I'm going to automatically get long, and the two prices I'm going to automatically get short. Once I'm in, then I'll start steering the trade. So I'm going to fire, then aim, and then be ready to exit and cash. Okay. So that's how I'm looking at that trade at that price level. Okay. Yeah, I'm not worried about owning Home Depot. I say very bravely, since I don't have any positions on it yet. But that's my trade for tomorrow. We'll take a look at that one tomorrow, see how that shapes out. Yeah, so when I see Home Depot is down 8.5%, I'm automatically interested. In the ETFs, I'm noticing that PBW is just getting slaughtered again, off another 4.5% down to 50. That thing's off from an all-time high of about 130. So that's down about 65 or 70%. I notice no 5DDs, but still plenty of auto framers testing out well. Those are the two that just quietly surprising. Mexico and Brazil, and their sector, Latin America. That's the big secret move right now. And oil, for obvious reasons. Lots of auto framers to choose from. These are 100% for me, intraday trades only. I'm using the swing trade frame to find the ones that have the most favorable longer term reward to risk ratio, so that I'm buying with a cushion of safety. But I'm really looking at these as intraday trades only. So I'm interested in things like IBM and Pfizer and Home Depot. There you are. Oops. On the daily squeezes, not many, because of the size of today's move. Only real estate is of interest to me as a defensive play. Starting to see a domination now in the winter of the four seasons on the Dow and the ETFs. Horrible, terrible, not good selling. Same thing on the ETFs. Brazil, silver, treasuries, and gold. Brazil, just a story that will not stop telling. And McDonald's. Still kind of interesting. That little 61 is the anomaly. McDonald's and Coke. We talked about that this weekend when we looked at the consumer staples were outperforming the consumer discretionary. And the ones that we looked at were Walmart, McDonald's, and Coke. So that's really not all that surprising. Yep. Everything's horrible, not looking good. Testing that, the belly of the RL10 breaking, slope of the RL30 rolling over, getting bad again. All right, let's look at some of the trades from the gang today. All right, here's from Dave. Excuse me. Okay, so this is Cliff. Got paid today? Yes, sir. He's looking at his 3 primary trade patterns. He buys the crossing of the Z2 or of the VWAP, I should say. Gets paid on the K2. Sees the higher low, CATA 2. That was basically the same trade I showed. Well, yours, it looks better on yours, if I'm being honest here. I like the collapsing dragon here. You're going to be upset with yourself that you let something that was this far in the money cross the VWAP. Like if you weren't short, you'd have taken that one long, I bet you, because you'd have seen these 2 lows and now a higher low, and you just said, oh, well, there's a CATA 2 for sure. I want to be long right there. So letting this thing come all the way back here it'll harm your spirit. So don't let it harm your spirit. I like this one as the collapsing dragon going through the VWAP, and pretty good scratch. You stayed out of the chop. I like this to the upside. That's one I took. And then that's the stop and reverse one that we worked our way through. So I'd like you to be thinking about the CD. This is the other one I took to the long side. That was good. And you got the one that I didn't get. So that's a pretty good day at work. No real flagrant issues, except I think on this one, you don't want to let that one go negative and then be open to the CD. But these are both pretty good. And that one to the short side is pretty darn good too. So I know you're not reluctant to be short. So that's good work, Dave. Wojcik on the Aussie. I'm going to guess. Oh, okay. So this is where you started to trade. So I'm noticing a low, kind of a higher low, another higher low. This one feels to me like you could have gotten long right here instead of here as a CATA 2. Then your risk box is only this, and then that makes this thing +2 instead of 0.4. And then that makes a big difference on that one. Yeah, the trade not taken. That's a collapsing dragon. This would be getting short in the pocket and then a standard cover would be like right in here. Stayed out of the chop pretty well. I like this short. I really do, because you're getting a collapsing dragon just above the VWAP. And if that fails, you expect that thing to come back to here or to yesterday's low. So that's the trade that you're playing for. That's why that's a good entry. Pretty good exit. I'd like to see the stop and reverse hit right there. But you got paid, maybe a little gun shy. And then there were two opportunities to be short with a cover and then a caught at 2. Oh, okay. So weren't available at those times. Okay. So not too bad. I'd like to see you concentrate in here and improve those 2 entries. Wojcik with the Bitcoin, 5 minutes. Started trading here. I think this is where you got to see these little higher lows in here. And then that becomes, when that thing turns and breaks up, that's where we got to be getting long right in here. That's like an emerging dragon. So we should be able to get long with our stop right here. And that gives you that much extra, which is as much as you gave back. So instead of, you got no lose plus dinner for 2, but I think this could have been 1R, and that makes the difference on the day. Good job staying out of the chop. I'd have been tempted in here with a low, and now a higher low. Somewhere in here, I'm really tempted. I'm also tempted when it crosses the VWAP or the Z3 pinch. So one of those three entries is possible. And then this one, I've either got to get out here or here. This is that just hurts too much. And then there's your stop and reverse but you're not in the meetings or not available, not in a meeting. So I think with just a minor polishing, we'd have been positive on both of those for the day, but good lessons to learn, good risk management. Ron on, let's see, this is in the Qs. Oh boy. Either this box or that box. Would love to have that one. But you did get paid on the crossing of the PSAR. That's probably, I think you probably did this. Because if that's 1.03, then your risk box probably had to be the top of the dragon, is what I'm guessing. Here's where that next one flips. So we might have been here or here. If you're ever in this position and you see this and starting to sell off, just take it here. But if you hold it this far and you see that 2 little dragon horns near the Z3 and no follow through and it's selling off, you got to get out in here. This is a great short, the PSAR flip. And again, this is probably where your risk box was. If this is 1.17, then playing to the VWAP is good. When this does not break back to the RL270 or the Bollinger Band mean, or even get through the PSAR dots, but rolls over, there you are. Or here, or here, or here. Those are the 4 things we should be looking at. This is a pretty good shot. You know, you had long, it pulls back and starts to take off again, held for about a scratch. Pretty, and a quick PSAR flip, so just get out. That's pretty good. Still got paid on a tough day in the market. Let's see. Proof that Luke is human after all. I can't remember the last time we saw that. Yeah, it ain't funny. And the reason it's not funny is this. 15R max favorable excursion and -1 for the day. And at least these two where you got to 1R in hand and still gave back 1.1 on each. So can't do that. We were laughing about that this weekend, and it's not funny. I mean, we actually said that this weekend. You said it. And that was, look, you got a maximum favorable excursion that is greater than your average MFE. Then you got to hang some kind of box off the top so that you lock in a gain, whether that's an average trade or a no lose plus dinner for two or an above average win. But when you have an abnormally good gain, you've got to start a money management stop, or you're going to get to experience this a lot more. And that is really harmful to your psyche. All right. So you got paid, good stop and reverse. This one, this 0.5 loss from here to here, remember, that's down a full 1 on 2 positions. So we gave back 2R just on that trade, which made the difference in making money today. This one had plenty of gains that netted 0.1. This one, oh my goodness, that'll hurt your feelings. Here. Yeah, enough said. Don't be doing this. We all appreciate you demonstrating that you're human and what it means to find the correct lesson. But keep that one posted. Yeah. Get to the zero state and sort it out. See you at the top. Dennis got paid today. He saw 30 trades. He's at 0.8. So that's about a 0.3 expectancy that you can make a living on 0.3. Yeah, this was the opportunity to be short as that rolls over and you get the RLXD and it crossing the PSAR. Waits for the collapsing dragon. I'm not offended by that. I think that's what it. Yeah, collapsing dragon. Reasonable. Good stop to the top. I'd have been really tempted when it broke again out of the Z2, or this one when it rolled over and didn't hit the PSAR. And then that would have been, yeah, not able to trade, but yeah, maybe shouldn't be working. But yeah, that's where you've identified the natural normal place. And oh, by the way, this one was 4.5, not to mention this. Oh, this was the MFE of, got it. Oh, I see. So that was 7.5. That's the opportunity cost of work. Got it. All right, that's everything we got for today. Let's get this published and processed, and keep up the good work. Hey, so let me know if I did the bar by bar stuff I did early as a way to kind of clear the deck, so that the last thing that we did was the report so that we could think about leading forward. What I didn't want to do was set up trade frames for today and then disrupt your preparation by thinking about today's trades. So that's why I've moved when I'm doing the bar by bar stuff, doing that before I do the daily report. Although then I went ahead and showed your trades. So I'm still trying to figure out what's the best for your learning styles right now. Okay. So that's that. All right. If you have not subscribed to the backer kit or the Kickstarter or WeFunder on Immortal Studios, there's still about 40 hours left to participate in what's going to be, they're going to end up being the premier wuxia genre of content providers in the world. I mean, Peter Shao is a real visionary. He's a serial entrepreneur. This is the 8th company he started, and his vision is to bring wuxia to the world. He owns all 61 best-selling novels of his father, Shao Yi. and he's committed to the long run on this thing. Very good discussion with him and his ideas for NFTs. So I think you want to take a close look at that, especially if you're Ken Hum in the sound of my voice. Yeah, Peter Shaw was awesome. All right, take good care, guys, and we shall see you tomorrow.